A growing number of senior citizens are getting into the mortgage market these days by getting reverse mortgages on their homes. They can give you some financial breathing room, but they're not right for everyone. I'm Paul Kangas.
And I'm Susie Garrow. This is Nightly Business Report for Wednesday, December 21st. With healthcare costs on the rise, many senior citizens are finding it tougher to pay their bills. So many are turning to their largest asset, their homes, and generating cash through reverse mortgages. The market for those types of mortgages has been growing about 40% a year over the past few years. And Diane Estabrook reports as baby boomers age, that trend could continue for decades.
How many years have they been married?
They've been married 70, and they'll be 71 in April.
Joel Brown says illness and home health care have drained his elderly parents' savings. So as the couple's financial guardian, Brown recently got a reverse mortgage on his parents' home. He now gets about $900 a month to pay for his parents' home health care and a line of credit to cover other costs.
I had basically been using their savings since 1999, so I had spent down all except about $50,000. So that was about my only choice. Otherwise, they would have to move in with one of the children.
Senior citizens who are living longer and facing rising medical costs are increasingly using reverse mortgages as a way to tap one of their biggest assets, their homes, for cash. As the name implies, a reverse mortgage works like a traditional one, only the lender pays the borrower instead of the other way around. Borrowers must be 62 or older. They can get a lump sum of cash, monthly payments, a line of credit, or a combination of the three. The borrower never has to leave his or her home, and the loan is paid back only after the borrower leaves the home or dies. Wells Fargo services about a third of the reverse mortgages in the U.S. Program manager Jeffrey Taylor says the Brown situation is typical of many customers.
If we need money for in-home care today, as opposed to going to a nursing home, and that's what the adult children and the seniors would prefer, this would be one of the ways that I would definitely look at it.
The federal government insures about 90% of the reverse mortgages written in the U.S. and requires financial counseling for borrowers. Closing costs, origination, and service fees can cost some borrowers several $1,000s. Financial planner Michael Whitty says those fees and the reason for the loan must be considered before taking out a reverse mortgage.
If they wanted to pay a large one-time long-term health care insurance premium, for example, or if they wanted to go ahead and pay off a lot of credit card debt, there we might use a home equity loan or a home equity line of credit rather than a reverse mortgage.
Reverse mortgages could become even more popular as the nation's 75 million baby boomers start becoming eligible for them over the next few years. Experts say that could attract more lenders into the market, possibly lowering origination and service fees. Diane Estabrook, Nightly Business Report, Chicago.